There's one question that I get, I want to say every day, and that is, how can you buy a home with no proof of income? The name of this program is called a no-doc. Okay. Now these no-doc, which is DOC, they can be used on the investment side and they can be used, for the primary residence side also. However, the statement no-doc is misleading. Here's why. Normally when you buy a home, you have to provide your tax returns, especially if you want to take advantage of down payment assistance. You have to show your tax returns. That's a requirement of it. But the reason why I say it's misleading is because the no-doc, it sounds like you just get your credit ran and you can buy a house. But you still have to provide bank statements. They have to see how much money you're making. It's not really proof of income. They consider tax returns as proof of income. But with no docs, you're just providing bank statements. So the no doc programs that I've seen, you have to provide a year's worth of bank statements or business bank statements. But here is, the drawback to using these, minimum paperwork style loans. You're going to have a higher interest rate. You're going to have to put down more money. Now, the ranges of down payments that I've seen with these programs is anywhere from 10% to 25% down. And then you also have closing costs. So that 10% is really like 13%, and that 25% is really like 27, 28%, because you have closing costs also, unless you can get the seller to cover. But these programs, they sound good and they're possible to use, but it's misleading. Like no doc, you still have to provide bank statements so that they can see that you have, income. Most institutions aren't going to lend you money, without seeing that you can really pay for this thing. Now, the reason why the interest rates are so high is because, a lot higher, is because they consider these types of loans risky. Okay, so you're going to have some, good credit. I really can't tell you, because each lender has different standards, what the credit threshold is. But I will say you will not see these types of programs with major banks. So like, you won't see it at Navy Federal. You won't see it at Bank of America, Wells Fargo. You'll have to go to these, what I call loan officers, independent loan officers, loan initiators to get access to these programs. You can't use first-time home buyer assistance with these programs. That's a drawback. So in real estate, like I always, tell buyers that I work with, or people, on YouTube, you need two things in real estate. One of two things. You either need the credit or you need the money. Okay. You're on one of those sides of the tracks. Now, if you have the credit, you can get the first time home buyers assistance. Of course, you'll need your tax returns. But if you don't have the tax returns and you don't have the credit, you're going to need the money. Okay, the more money that you have to put down, the more lenient and the more programs you can get access to, because these banks, they want that down payment money. And it also shows that you can assume some of that risk. If you want to get access to these programs, just either look up loan initiators or mortgage brokers in your area, or just go on Google and type in no doc loans, with your state. And then you'll start to see, no doc mortgage loans, and then put your state on there. So if you're in Texas, no doc mortgage loans, Texas, and you'll see these loan officers pop up, or these institutions that have these programs. But I'm telling you now, before you even look this up, you're going to need between 10% and 25% of the purchase price in cash to be able to get access to these programs. And of course, you can't just walk into a closing with cash in a duffel bag. Okay, that's the fastest way for them to call the IRS or the FBI and have you investigated. You're gonna have to have and show that you have this money in a retirement account or in your bank account before they actually will issue you a pre-approval to be able to take advantage of these programs.